Novo Nordisk is one of the most valuable companies in Europe, and it is a global leader in the healthcare space, and I think it's a very exciting investment opportunity. And in today's video, I'm going to talk to you about why I personally have a pretty sizable investment in Novo Nordisk, and I'm going to talk about three main reasons as to why I find the equities of Novo Nordisk so compelling at the moment. And those are the valuation story, the GLP-1 or the obesity drug story, and just their long-standing heritage of being a quality growth company. Now, this is not financial advice. This video is for entertainment purposes only, but I do think it's quite an exciting thing to talk about, and I think it would be quite a valuable video to learn from, if nothing else. So with that said, let's dive into it. And for those of you that don't know me, a brief introduction, I'm Jack. I'm an investment analyst at a wealth management company and recently passed CFA level 3. So I do feel quite qualified to talk about shares of different companies. So even if you're not, let's say, convinced by my story, hopefully you can learn a couple of things and take them into your own personal investments. So with that said, let's dive into the valuation side of Novo and why I think it's a very compelling story at the moment. So, valuation. Now, in my opinion, the best way, like one metric to look at for evaluation, a gauge of evaluation of a company, is the price to earnings ratio, which I think is like the quickest way to judge a company if they are profit making. And for Novo Nordisk, I've got a couple of figures that I want to sort of talk through. But the current forward PE on Novo Nordisk is about 17 times, which means if their earnings were $10, then the share price would be 170. And that's a pretty reasonable valuation for any stock. But what you typically see is higher growth stocks have higher PEs. So if something's growing at 20% a year, typically a fair valuation would be 20 times. And if something was growing at 30% a year, then it would be 30 times. And that's known as a PEG ratio, or a price earnings growth ratio of 1. That's typically deemed fair price. Now, as I said, Novo Nordisk's forward PE is about 17 times. And I want to compare that to, firstly, the growth story, and secondly, their history. So first thing is their history. And what you can see on screen now is a trend, or their recent history of their forward PE ratio. And you can see in 2015, it was 25. In 2016, it was a big dip down to 16. But since their GLP-1 weight loss drug sort of revolution and growth really kick-started, which is around that 2020, 2021 time, the PE has constantly been above 20 and actually pushed towards 30 and even 40. Now, this is only the year-end data, but there have been spikes in between that. Now, at the moment, as I said earlier, the forward PE is 17 times, and that is because the stock has fallen about 60% from its peak, driven by fears around competition in the weight loss space. I think fears around RFK in the US office, sort of maybe putting the brakes on the weight loss revolution, I guess, the weight loss drug revolution, and also the tariff stuff with Trump. So those three things, I think, have caused a lot of fear in the Novo stock price. And then once that fear sort of kicks in, then you've got investor sentiment, people start to sell out, and that sort of creates a feedback loop. But ultimately, you don't really get to buy great companies for cheap prices without some fear or uncertainty. You know, another stock that I hold is Google, and I might do another video on that, but that's also, I think, at about 17 times. And, you know, that's a great company. But the reason there's fear is because of ChatGPT. But anyway, I'm getting distracted. The forward PE is low relative to history. Now, the other thing I wanted to show was the forward PE projected forward. Now, again, if you think about PE ratios, you've got the price on top and the earnings on the bottom. So if the price stays the same and the earnings grow, then the PE will come down. And that's what you can see on this chart here. So what you're seeing here is if the price were to stay the same, but the earnings were to grow as forecasted by investment banker analysts and stuff like that, and equity analysts, then by December 2028, you would have a PE ratio on Novo Nordisk of 12 times forward earnings, which is incredibly low. That's pretty much a value stock at that point, or getting close to it, which basically means a low growth, low quality company. And a recent example of where that would have been a great time to buy would be Meta. Now, I'll put up some charts if I can find some, but Meta reached a low, I think, of 8 times earnings actually, but it was around 8, 10, 12, really low numbers. And since then, I think the stock's up 7 or 8 times because not only have the earnings grown, but also the multiple has re-expanded. So again, not to get too technical, but let's say the earnings stay the same, $10 per share, and you go from a 10 times multiple, which would be 10 times 10, so 100, to a 20 times multiple, that would be doubling the stock price, but the earnings haven't changed. You've still got $10 per share of earnings, but suddenly now the stock's worth 200. Now let's say earnings double in that time. So we've got the earnings doubling and the multiple doubling. You go from 10 times 10 to 20 times 20. And if I'm not going to embarrass myself, that's 400. So you've got 4 times your money because the share price, the earnings have grown, the company's done well, but also investor sentiment or how investors perceive the growth of that stock has gone up. And that's what I think the opportunity is in Novo. So that's the PE covered off. But just one more quick thing on that before I move on. I've got the forecast tab. If you go to TradingView, a website called TradingView, you can go on the forecast tab of any stock. And what you can see here are the analyst predictions for earnings per share at the bottom. So you can see a very steady growth story from around high 20s to 40 within 4 years, which I don't know what the compound growth rate there is, probably about 17, 18%. So for a stock growing at 18%, that's not unreasonable. Like, again, that ties into that peg of 1. But actually, I think given the nature of these cash flows, because they're almost insensitive to the business cycle, if you've got a tech company growing at 20% a year, that's dependent on economic growth and tech companies continuing to expand. There's a lot of fat people in America and in the world actually, and a recession is not going to make them less fat. They still want to take this drug, and whether there's a recession or not, I'm not sure, but I'm pretty confident that weight loss drug sales will increase. And just on that point, you can also see the analysts have a price target. They have to set price targets as part of their job, and the median average, I don't know if it's median or mean, but let's call it median, is 50% upside from here, with 18 calling it a strong buy, 3 actually calling it a strong sell, which I assume is based again on that competition story against their main competitor Eli Lilly in the weight loss drug space. But yeah, I think it's quite a compelling valuation story, and hopefully, not hopefully you agree. If you don't agree, I don't really care. It won't really impact me or the share price, but I think it's quite interesting. So with that point covered off, we'll move on to the weight loss drug story and why I think that's really exciting. So I think this chart really says it all. So what you've got here is the number of patients globally on GLP-1 treatments from November 2021 to November 2024. And that deep blue area, shaded area at the bottom is Novo Nordisk, and their closest competitor, Eli Lilly, just above them at 34%. So what you've got here is a company that is the market leader, or at least has the highest market share at the moment, in a rapidly growing market with capacity constraints that are currently being dealt with, basically translating into a huge runway for growth, in my opinion. Now, as I said, there are a lot of fat people in the world, and those fat people don't really want to be fat, I don't think. Maybe some of them do, but a lot of them don't. And there is now an easy way, a relatively easy way, to get not fat, and that is to take these drugs. Now, in terms of the pipeline and the patents and stuff like that, I'm fairly confident in saying that Novo Nordisk have patents out to 2031 or 2032. So, maybe they fall off a cliff after that. Maybe they don't have any further success in their drug development and Eli Lilly completely take over the market from there. At the current earnings valuation, 17 times forward, at 20% earnings growth over the next, let's say, 6 years, which I don't think is unreasonable, even if it's 15%, worst case scenario is 10%, you probably won't lose money over that 6-year period because, again, of how that PE works. Novo's a quality company. It should always be valued at least, I think a floor would be a minimum of 14, 15 times earnings. So let's say the patents all run off, but that earnings has grown so much that the price you pay now will sort of equate to the price then, if that makes sense. Hopefully that does. If it doesn't, then let me know in the comments. I'm actually going to do a sort of deep dive on PE ratios and explaining how that works in my next video, so I probably should have done it the other way around. But anyway, what you can see here is they're in a rapidly growing market, they're the market leader, and the capacity constraints in terms of factory building, capex to expand the pipeline, a lot of that groundwork's been done over the last year and I think into this year. So that sort of 5-6 years following 2025, 2026 should be some really strong growth drivers for Novo Nordisk. And the final thing I'll say on the valuation / sentiment / timing side is this monthly chart of Novo Nordisk. So what you can see here is the price of Novo Nordisk shares going back to 1989. And the first thing of note is the insane performance of the shares and the underlying company and the quality of their R&D, the marketing and all that stuff. As a healthcare company, they've done very well. And the other side of it is this is one of very few huge drawdowns in Novo's history. And I think it might actually be the worst or joint worst in terms of how far the share price has fallen from the peak. And as far as I can see, it seems pretty unwarranted. Like, yes, maybe there was a bit of overexcitement at the peak recently, 2024, I think it is, or 2023. But, I mean, to fall 60% when you've got a drug in such high demand that's barely penetrated the market yet, seems a bit excessive for me. And the final thing that I'm just going to throw in there for the case for Novo is its long-standing heritage as a company, pretty much as a quality company, compounding growth with strong R&D without getting into any of the major scandals that you've seen out of the US. And I imagine part of that is to do with sort of the somewhat, I want to use the word wokey culture in sort of Scandinavia, in terms of it's a company from Denmark, you know, they're not as pure shareholder focused as like Purdue Pharma or whatever they're called, where they want to just release a ton of, opioids to just get everyone hooked. Like, this company, as far as I can tell, as far as I'm aware, does get some sort of a kick out of doing good for the world. You know, they're the global leaders in diabetes, global leaders in the weight loss drugs, as I said. I think they're either owned or they massively fund some sort of foundation where basically it's called the Novo Foundation or something like that. I'll put up some stuff on screen, and it's kind of like a charity that the earnings from Novo fuel. So yeah, I mean, they're doing something right. The company management have all been in place for, well, the CEO, the CFO, as far as I'm aware, have been in the company for sort of 25, 30 years. So they know the company inside out. They're very well directed. And as far as I can tell, it's a great company from that perspective. So it's not a flash in the pan type thing. Like I said, even if the patents all run off in 2031, 2032, the multiples should see a floor, and I'm sure they'll have other drugs anyway. They've got other arms of business. It's just this weight loss drug stuff has come out of nowhere, and it's got such a huge runway that's sort of all of the story that's surrounded these stocks, Eli Lilly and Novo. But they do have other business lines, and they are strong companies regardless. So yeah, I mean, that last one was a bit of a ramble, but I think it adds to the story. And yeah, hopefully you found something interesting, something insightful from this video. And yeah, leave a like, subscribe, share it with your friends, and I'll see you in the next one.